Good morning, everyone. Good morning. Thank you for waiting. We are broadcasting live from our NTO. Welcome to our earnings release presentation for the last quarter and also for 2021. Please remember you will be on mute and you'll be listening to the presentation only. We'll have a Q&A by the end. Please ask your questions through the chat. I'll be reading the questions and our directors will be answering them. We won't be taking questions on the mic. Also, please write your name when you ask a question so that we know who this comes from and your company if you'd like to inform us of that. Tell us if you're an individual investor as well. This slide deck will be available on our website, www.hermespardini.com.br/ir in the results section. Any forward-looking statements that might be made here regarding future forecasts, operating results, and operating targets are based on the assumptions of the Board of Directors of the Hermes Pardini Institute, as well as on information currently available to them. These are not a guarantee of performance because they involve uncertainty as they involve future events. They rely on circumstances that may or may not come to be. Overall, industry conditions and other operating factors could have an impact on future results and could lead to substantially different results from the ones that we have mentioned in our forward-looking statements. Today we have Mr. Roberto Santoro, our CEO, Mr. Alessandro Ferreira, our Sales and Marketing VP, Mr. Camilo Delalis, our CFO and IRO, Adriana Linhares, our PSC Business Executive Officer, Guilherme Colares, our COO, Fernando Ramos, our Lab-to-Lab Business Executive Officer, João Alvarenga, our IT and Digital Executive Officer, and myself and Milena, who work on IR. Now I would like to hand it over to Mr. Roberto, our CEO. Please, Mr. Santoro, go ahead. Thank you. Good morning. Welcome. Let me highlight that 2021 was still a year with the COVID-19 pandemic, with a lot of challenges. We had a strong second wave and a lot of uncertainty. Even amidst a lot of uncertainty, we kept on working hard to boost our results. We worked on planning and execution, and our focus brought us significant historical results in 2021. Camilo will be sharing the numbers with us, but I would like to highlight 7 records that we broke: volume, revenue, gross profit, EBITDA, net profit, operating cash flow, and the number of clients we have in the Lab-to-Lab segment. I will be diving deeper into each one of them. First, we have the volume of tests. Our volume of tests in 2021 reached 140 million tests. This is a record high for our company. Even if we exclude COVID tests in 2021, we still had a 35.7% growth. In the fourth quarter, we have 12.7% growth compared to the fourth quarter of 2020. Excluding COVID, we had 25.2% of growth. In our patient service centers, our service units, in the fourth quarter of 2021, we had a 7.4% growth in our total gross revenue year-over-year. Excluding COVID-19, our growth was 27.8%. Now, comparing the fourth quarter of 2021 and the fourth quarter of 2019 before the pandemic, we had 53.9% of growth in the total gross revenue for the PSC segment. Excluding COVID, our growth was 32.4%. We also expanded the model of new channels that we use, especially home collection. In 2021 compared to 2020, we had a 44% growth. Our revenue for this channel grew 47%, almost 50%. Now let me talk about highlights for the PSC segment in the metropolitan region of São Paulo. As stated in our last earnings release, we had exponential growth in the São Paulo market. We bought the IACS lab, which is the most important one for the Baixada Santista region. We expanded our outreach in the coastline with 13 locations in Santos, Cubatão, São Vicente, Praia Grande, Guarujá, and Itanhaém. Just like with other acquisitions in the past few years, we're going to approach the IACS with investments that are focused on expanding the portfolio of services so that we can offer thorough services to patients, prescribing doctors, healthcare operators, and companies. We're also focused on occupational health and toxicology. Another highlight in the market in São Paulo is that we acquired the Dr. Odivania Moscogliato Clinic. This is a boutique clinic for female health. This is our first time in the Vale do Paraíba region, one of the regions that grows the most in São Paulo. When it comes to acquisitions, we're also expanding our portfolio of services in Belém do Pará and other cities in the state of Pará by acquiring the Paulo Azevedo Lab, which is also a leading brand in the region. We're now adding vaccines and other tests to our portfolio. Another highlight in São Paulo is that we're going to start offering services for clinical analysis in a healthcare space for a big healthcare provider in the neighborhood of Tatuapé. Within the next months, we're also going to launch another 4 locations for clinical analysis and low complexity imaging in the metropolitan region in São Paulo, in the cities of Guarulhos, Mogi das Cruzes, São Bernardo do Campo, and Osasco. This is going to expand our availability and our offerings, especially for our clients in the metropolitan region of this big market that São Paulo represents. We also launched our location in Moema. We were able to bring in different operators from São Paulo so that they became a part of our network, and we showed them that the Hermes Pardini brand is a good cost-effective option. Now let me talk about the metropolitan region of Belo Horizonte. We now have a new brand, which is Lab Class Pardini, replacing the Humberto Abrão brand, an acquisition from 4 years ago. So this is a brand that is a part of our expansion plans regarding our business model. We want to use other approaches in the metropolitan region of Belo Horizonte. We see big changes in this market. Also invested a lot in technology. We renovated units, we worked with service, production, we expanded our portfolio, etc. We also invested in hospitality and hotel-like services in Belo Horizonte. And Lab Class is a model that we want to implement in regions that require this. Regions that could be big regions for demographic and economic growth. We also have a lot of potential for coverage when it comes to health insurance. Now, going back to the lab-to-lab segment, in the fourth quarter of 2021, excluding COVID-19 tests, we had a 16.9% growth compared to the fourth quarter of 2020. When we compare it to the fourth quarter of 2019, before the pandemic, we saw a total growth in gross revenue of 40.8%, and without COVID tests, growth was 26.2%. The recurring revenue growth was impacted by trade initiatives and also the change in our production model, including the advanced technical centers that we brought to our brand in other states mainly. This brings us more competitiveness and a better lead time in our deadlines for lab-to-lab clients all over Brazil. These models are based on the enterprise model. These models are connected. We also have digital management for these models by our center. We also have new sources of revenue for the lab-to-lab segment. First, we have Apoio Hospitalar. This is a new type of hospital B2B for some verticals. We also have hospitals that are focused on oncology. Secondly, we have our distributor called Parties. These two new sources of revenue represented 3.4% of our gross revenue in the lab-to-lab segment in the fourth quarter. In 2021, this represented 4.7% of the total gross revenue for the lab-to-lab segment. Now let's talk about forensic toxicology. Toxicology tests showed a gross revenue growth of, or actually gross revenue of 32.9 million reais in the fourth quarter of 2021, which is over 40% of growth compared to the fourth quarter of 2022. We also see new policies and new laws by CONTRAN, and we saw the applicable law change to make sure there was compliance with it. In toxicology, we have a really big ecosystem in the lab-to-lab partners and also in the partnerships with different companies. With our forensic and occupational portfolio, we also saw a lot of growth when it comes to this ecosystem. Let me now talk about the awards we've been receiving. We got 5 new awards when it comes to logistics and IT and healthcare overall. Pardini is usually one of the companies that stand out when we see these awards. We're also taking part in innovation projects, for example, Pravcov from the Department of Healthcare in Brazil. Finally, I would like to say that this year we're going to launch an important piece of innovation, which is called precision care. This was developed by 2021 and will be launched by 2022 as a multi-channel unified platform by the Pardini Group to cater to every segment of customers we may have. We revisited their journeys according to the stakeholders we have, and we're going to launch this multi-channel journey to increase connections and to make it easier for customers to enjoy one single digital ecosystem. This is how their transactions with the Pardini Group will be made even easier. This will happen in this half of the year. Again, I would like to emphasize what I always say every time we have an earnings release presentation. We are still focused on working on diagnostic medicine. We are a big company with a lot of investments in infrastructure. We are one of the few companies with balance between PSC and lab to lab within one single structure for diagnostics medicine. And this is extremely key for the healthcare network in Brazil. Finally, I would like to once again thank our employees and partners throughout the country for the excellent results in 2021, which I got to share with you now. I will now be handing it over to Mr. Camilo Dolalis, who will go into further details about our figures for this quarter. Thank you.
Thank you, Roberto. Good morning, everyone. I would like to thank everyone who's attending our earnings release call. Basically, I would like to highlight our results that indicate the dedication in the execution of our plans, the agility in our internal actions that have provided these record highs in our historical data. We have achieved records in gross revenue, EBITDA, gross and net income, and especially operating cash flow. In terms of our records and volumes, as Roberto has already mentioned, we processed 140 million tests in 2021. This is due to the performance of the enterprise project. This was leveraged by the sales that were implemented by our sales team. It's important to highlight that these 140 million account for 75% of our current production capacity. It's also important to highlight that every day the company strives to reduce our break-even level. The more we produce, the more efficient we are through our enterprise project, and therefore we are able to reduce our break-even levels. Along the year, we've experienced a growth in the lab-to-lab segment, both in the low complexity level of the tests as well as in specialized tests, as well as in personalized medicine and toxicology. We were also leveraged by Apoio Hospitalar, a new initiative conducted by the company, and that had started very well with great results. Also, Pardis Distributing Company. During the pandemic, this segment has allowed us to improve the interface with our clients and to provide just-in-time services to our customers. And all of them contributed to our growth. In the PSC segment, I would like to highlight the significant two-digit increase in volume in São Paulo in the fourth quarter of 2021, even ex-COVID, leveraged by the addition of the new Amil contract that has led to a significant growth in volume in São Paulo. This new contract became effective in the end of 2021. The consolidated results in the PSC segment, we had a two-digit growth in all regions in Brazil where we operate. Regarding gross revenue, I would like to highlight that obviously we had the contribution from the COVID tests. But the main contribution we had to do with the increased volume of tests. There was an additional 37% increase in volume of tests compared to the previous period. This is a significant increase that has leveraged the growth in gross revenue. Considering the 12 months of 2021, there was a 33.5% growth in gross revenue, and excluding COVID tests, this growth accounted for 38.1%, thus reflecting the resumption of all types of tests and incorporation of the acquisitions in the PSC segments that were implemented in 2021. We also achieved records in gross profit. In the fourth quarter, it showed a slight decrease because of the slight variation we had in the volumes of COVID tests comparing 2020 to 2021, which was offset by the acquisitions and that were made, the mergers and acquisitions we had in 2021, and also because of the increased number of toxicology tests that we had and for driver's license. and also the results of the lab-to-lab segment. Vis-à-vis 2020, we had a 52% increase in gross profit. So this has to do with similar effects we had in revenue and also the productivity levels achieved by the enterprise project. The EBITDA in the fourth quarter achieved about 100 million reais, which is aligned with the same period of the previous year. The EBITDA margin reached almost 21% in the fourth quarter of 2021, vis-à-vis the levels of 2020, which indicated a slight retraction related to the lower levels of COVID tests. If we take into account the EBITDA levels in the year, it achieved a 57% growth, which was an extraordinary figure vis-à-vis last year. Again, this was leveraged by our productivity levels and the reduction in costs we were able to achieve given our acquisitions, our increased productivity, and the indicators that we already mentioned. General and administrative expenses showed a slight increase vis-à-vis the last year, especially because of the salary increases we had to offset the inflation levels. In the past year, we had decided, based on the union agreement, not to have any salary increases reflecting the inflation increase, but this year this was done. We are keeping track of all the inflation rates on labor, materials, and our fixed costs, especially logistics and electricity. Regarding net profit or net income, we had a small reduction of 7.2% vis-à-vis the fourth quarter of 2020. This was related to our financial costs, which increased due to the increased internal interest rate. That was Selic rate that increased and had this impact on our business. We are working very strongly to reduce our effective tax base. We want to keep on by adopting the distribution of JCP so that we can keep this tax under control. This tax has already been extinct. The interest on equity has already been extinct, so we need to look for new challenges. ROIC, excluding premium, has reached 45.9%, a 176 BPS increase vis-à-vis the same period of the last year. Our operating cash flow in the fourth quarter of 2021 totaled 137 million, a 103% increase vis-à-vis the same period of the last year. Compared to 2020, cash generation was very close to our EBITDA. This is due to the fact of the efforts that have been made and all the tools adopted by the company to keep control over taxes and also to keep control of our working capital. We implemented several tools to reduce the number of days on customer, days of stock, and increase in our days at the suppliers. We continue working to keep our delinquency rates and our disallowance rates under control. Delinquency rate and also for disallowance total 0.35% of our net revenue. We wrap up 2021 having achieved many records for the company, even during a global pandemic. So we resumed our inorganic growth through 4 acquisitions that shows our constant pursuit of business growth and expanding our presence in regions that show high potential. We are ready for 2022 so that we can keep our growth at this pace, even in an environment with a reduced volume of COVID tests. We believe that the investments made in the past years have allowed the company to keep an excellent performance in our recurring operations. So we believe that 2022 will be a more difficult year, but our figures are going to be even better than in 2021. Thank you very much. Now I turn over back to BL.
Thank you, Camilo. We'll now have a Q&A session. Our first question is from Eugenia Cavallero from JP Morgan on the sell side. She asks, and by the way, this is a question to Camilo, and then Dr. Guilherme Colares can add his answer too. She says, good morning. What about the demand for COVID testing at the beginning of the year? And what about its impact on the results for the first quarter of 2022? Good morning. What's her name again, Biao? Eugenia. Hi, good morning, Eugenia. Thank you for your question. Eugenia, in the first quarter of 2021, especially in January, we performed a much higher volume than in January of the previous year. In February, we saw a slight decrease when it comes to the average of January. We believe that after Carnival season, we'll most likely have more demand for COVID-19 testing. So our structure is ready. We are organized and we are prepared for this increase in demand. For 2022, in our strategic planning, we're already pricing things for a much lower volume when it comes to COVID-19. In January, we were above what we expected. Of course, we're rooting for the end of the pandemic. But we do believe that throughout 2022, we'll still have high percentages of COVID-19 testing compared to 2021. Guilherme Colares, do you have anything to add? Yes, Camilo, thank you. Let me add something. I think it is important to explain that we were able to keep our COVID-19 production structure running. We saw some news in the media about a lack of inputs, but we were keeping an eye on everything that was happening throughout the world. So we kept a close eye on what was happening with inputs with our suppliers. And even during peak times, we were able to expand our capacity. We didn't have any shortage of inputs when it comes to RT-PCR testing for COVID-19. This has to do with the epidemiological surveillance work we did and with the great relationships we have with our suppliers. We kept an eye on what was happening abroad and we got structured to quickly respond to demand. Of course, we had a peak of Omicron, but as Camilo said, it is now going down, and we were able to go through this period without any kind of shortage, and we were able to expand our capacity. Thank you. Eugenia has another question. This is a question for Fernando Ramos, our lab-to-lab officer. What is the expected impact of new sources of revenue on the lab-to-lab segment? Of course. Thank you again for your question, Eugenia. Let me make something clear to the audience. Whenever we talk about new sources of revenue, we are basically talking about two initiatives that we implemented in the lab-to-lab segment along 2020 and also 2021. We're talking about the Apoio Hospitalar initiative and the Parties Distributor. When it comes to Apoio Hospitalar, we are managing 6 labs inside hospitals. So we have lab facilities in Fortaleza, Belo Horizonte, Belém do Pará, and we also work with 2 hospitals in the countryside of Pará, and we have been taking care of its management. Right now, our commercial focus is basically on 3 different types of hospitals. First, hospitals that are managed by more vertical HMOs. Number 2, highly specialized hospitals, for instance, oncology hospitals. And number 3, reference hospitals that are really big deals where they are. Of course, we are prospecting a lot in different parts of the country. We are looking for opportunities, and we are sure that the reputation we built for the Pardini's brand during 62 years has been opening up doors to us for people to talk to us and give us opportunities. And we are offering a model that is a bit different from what the main competition has to offer. We're able to offer a large portfolio of products, very robust logistics and infrastructure, specialized service, and also very competitive pricing. We're able to offer competitive prices because of the structure that we developed and because of our relationship model with suppliers. We can clearly notice that we offer something different in this industry. And customers have been enjoying that. That is why we envision a lot of possibilities. Now, when it comes to the parties distributor, right now our revenue is definitely focused on COVID testing, for sure. However, we have a dedicated team at parties who is working really hard so that we can increase the number of products that we offer. This is how we can reduce our exposure to COVID-19 tests. We're talking about the long term, of course. So we want other products to have relevant growth, both in the number of SKUs and also the revenue that they are going to bring in. We're also working heavily on a new sales structure. During the second quarter, we should be releasing an e-commerce and marketplace platform that will be available to our customers. This will be a very robust structure when it comes to IT. We're going to have a larger range of products, and even our partners will be able to start stores inside this marketplace to offer their products to our portfolio of lab-to-lab clients. Our sales team is also trying to increase our penetration in the lab-to-lab segment. Just for your information, so far we've been able to sell to 25% of the lab-to-lab customers. So we still have a lot to go, and we can bring even more clients in if we think about the share of wallet of products that they buy on a daily basis. So we're talking about pre-analysis inputs, collection inputs, analysis inputs, etc., etc. So we have different paths of growth in products, clients, and other items. When we think about these two consolidated business, both Apoio Hospitalar and the Parties Distributor, we want, Eugenia, for these businesses not only to become more relevant and to grow faster than our traditional lab-to-lab business because of all their potential, but we also want them to bring us synergy with our main business. Let me give you an example. Apoio Hospitalar is bringing us synergy for personalized medicine. The Pardes distributor is also giving us opportunities in a few hospitals for us to get started on a relationship with them. Within the next 4 to 5 years, we'd like this revenue, and as Roberto was saying, was 4.7% in 2021 if we look at the consolidated number for these businesses. So 4.7% of the lab to lab revenue, we could be multiplying this by 3 or even 4 in 4 to 5 years. So we want these new sources of revenue to become increasingly relevant over time.
Alessandro will add to what you said. Great. Thank you, Eugenia, once again for your participation. It's very important for us not only to make an individual analysis of the business, but also look into its possibilities as it moves into the purchasing supply chain of our lab to lab customers. We want to transition business units among themselves, getting them to have a closer relationship, increasing the barrier to exit of our customers. With that, we'll have a closer relationship, and this customer will purchase several services from Grupo Pardini, from the Pardini Group, rather than purchasing those services from different suppliers in the market. So we already provide outsourced tests. Now we can sell pre-analytical, analytical input materials, and we also want to be in different parts of the supply chain. There is a business synergy to increase the operational loyalty of that customer, of those customers. And when we talk about hospitals, this is true not only for hospitals. Today, we operate labs at hospitals and we provide services to customers in the lab to lab segment. We do that in Fortaleza. In Belo Horizonte, for example, we also have services for urgent tests at hospitals. And as these operation becomes more widespread in our operating technical centers, it is easier to operate a model like that. So we are advancing in advanced technical centers, aligning the lab to lab strategy to the hospital strategy. The M&A of PSC works the same. Whenever we are going to have an M&A in the PSC segment, we constantly analyze whether that lab can be an advanced technical center. So this is something we take into account. We've had good results. And today, the volume of tests in Fortaleza at the advanced technical center of the hospital is good. And we've just started this initiative. And we also have a portfolio of customers who are familiar with the Pardini Group. But just 25% of this portfolio we've interacted with. So these are customers who are familiar with the Pardini Group. And now we are going to increase that portfolio when we launch the Pardini Group's marketplace in March. So we pay attention to those initiatives, but you see, they interact with the group strategies as a whole. Thank you, Alessandro, for your comments. Next question is from Vinicius Figueiredo with Itaú BBA. He has two questions related to the sell side. First, could you share more details about the agreement you have with a major healthcare operator in São Paulo? So is there any opportunities to expand this contract bilaterally? And then another question more related to the lab to lab segment. Could you expand on the price readjustments in the lab to lab segment, and how does that compare to other players in the segment, in the industry? So regarding this major healthcare operator, there was a bid. Each healthcare operator has different health plans. Those plans went through a bid. This bid took into account several requirements, including strategic requirements related to positioning and whether these providers were associated with other healthcare operators or not. Pardini won this bid with exclusivity for some cases in São Paulo. And as we expand this business, we are going to have more members being taken to our group for their tests. So within this PSC groups, those health care portfolio of clients can only use Pardini units. We have some units that are going to be open this year, maybe at the end of the first quarter, beginning of the second quarter. And we have a schedule to open new units outside the city of São Paulo, but in the metropolitan area of São Paulo. When we open those new units, though the members of the healthcare operators will be have their tests conducted solely by the Pardini Group. So regarding other question, what we did was we provide services exclusively to the health plans operated by those healthcare operators. What happens is that other players that were active in that region are no longer active because we established this agreement with this healthcare operator. This is a healthcare operator we've had a business with for many years. So what happened is that other players' units were removed from the network of services of these healthcare operator, and these services were transferred to the Pardini Group. This contract is automatically renewed. There are clauses, of course, and this is regulated by the national authority that regulates supplementary medicine in Brazil, and the contracts are renewed every year. We have done that in São Paulo units, and in Rio de Janeiro, Omicron has an impact on the figures. There were several healthcare units that were full because of the Omicron effect. And there was a ramp up, especially in clinical analysis since the end of the year. And this association allows us to expand those new units. But maybe this is what your question was about. Those new units are not exclusive of those healthcare operators. We can serve the healthcare operators members, but we can also serve other healthcare operators in our units, such as the example of the Moema unit that has recently been opened. Very well located in the city of São Paulo with exclusive services. So in this unit, we not only serve the members of this healthcare operator customer through the bid, but also other healthcare operators. So this bilateral issue has to do with that. So we will keep serving healthcare operators as a whole, but in this region, in particular for these healthcare operators only by Pardini. And as to price readjustments, I would like to turn over to someone else to answer that question. But let me tell you that this price readjustment is going to be done earlier than initially expected. This was already accepted. And other players did the same. They made price readjustments at the end of the year or the beginning of this year. And that's the message I have to share with you. We are able to provide a new dynamics for this lab to lab segment, which is the readjustment of our price list, offsetting the increased inflation rate and also the increased medical costs, and now establish this at this time of the year. So Fernando, could you expand on that?
Thank you, Alessandro. This is a really important question by Vinicius. This is a point of concern for Alessandro and I, including the lab-to-lab team in the last few months related to profitability. Let me recap things really quickly. We spent a few years without price readjustments. In 2021, we had a price readjustment in the month of March. At the time, we increased it by a little bit more than the IPCA of the previous 12 months. But with the IPCA index of the last 12 months, we're actually talking about a much larger figure now. And this larger figure made us advance our readjustment, as Alessandra was saying. We sent a notice to customers in December so that we would deploy this adjustment in January. We see a lot of inflation in this industry. And we also need to take this industry into account because we saw our main competitors deploying their readjustments during the same period. Our suppliers were also adjusting their prices during the same time. So we believed it was the right time to bring this topic up. As I was saying in one of the last earnings release presentations, we want to foster yearly adjustments. We want to foster this with our client portfolio. Of course, it all depends on inflation rates. These percentages are going to vary year by year, but we want this to be routine. We know this is common practice in different parts of our network. Now, specifically talking about the price adjustments in 2022, Vinicius, we do have a target. We finished most of the negotiations with customers in January, and we are still negotiating with some clients at advanced stages of the conversation. We should be done by February. But we should be close from what we were saying during our IPO. We want to transfer at least 50% of the IPCA from this period to our portfolio of clients. It could be a little bit more than that, but we are working on staying close to this figure so that we can go back to a better level of profitability and competitiveness throughout 2022. Thank you, Fernando. We now have one last question. And by the way, if you have other questions, please feel free to leave them in the chat. So this one is from Ricardo Boiati from Safra, also on the sell side. Good morning. What is your outlook for growth through PSC acquisitions in new regions? What about the multipliers for these assets? Are they stable? Are they going down? Are they going up? In a more expensive cost of capital, is that going to change how you allocate or assign your resources? Camilo is going to answer this question. Thank you, Ricardo. Ricardo, our outlook for growth through acquisitions is still great. We've always focused on acquisitions both for the lab-to-lab segment and the PSC segment. Of course, at different points in time, we see different trends and we analyze them internally to decide how we're going to allocate our resources. We're analyzing different possibilities on our pipeline, and maybe even during the first quarter, we could be completing 2 or 3 new acquisitions. We work with a discounted cash flow, so of course we take into account multipliers. And when we work on our return rate, we think about the cost of capital. Right now, of course, we have a growth that is far away from the cost of capital, so this has a big impact on our analysis. But we always try to make up for that with high levels of efficiency. and we always try to make up for that with better capital allocation. In the last years, in the channels we've been working, we allocated more resources to the PSC segment. As you have seen in the last months, we had the acquisition of the Paulo Azevedo lab, the IACS lab, and as Roberto was saying, the Odivania clinic as well. This greatly increases performance and the contribution of the PSC segment. However, in upcoming months, we're going to keep on running our analysis for the ongoing processes that we have right now. We've finished 2 or 3 analyses and we'll be making announcements soon. The effect of cost of capital has been having a lot of impact on these negotiations, but we are finding great efficiency in these negotiations. We're always keeping these multipliers in line with industry standards. Thank you for your answer, Camilo. So this is the end of our Q&A session. I will now hand it back over to Mr. Roberto Santoro, our CEO, for his final remarks. Roberto, I believe you are on mute. Thank you. I would like to thank everyone who attended this earnings release presentation and everyone who asked questions. I would just like to stress that Pardini is still focused on its purpose when it comes to diagnostic medicine, especially when it comes to investing in infrastructure. Let me highlight that the Pardini Group is unique. It is able to strike balance between 2 big businesses, the lab-to-lab segment and the PSC segment. There's also a lot of potential when it comes to increasing the number of transactions with new clients, especially when it comes to oncology in different hospitals and also new revenue initiatives. What is also relevant is that, as we were saying, M&A strategies are converging to what we want. They usually lead us to production competence in certain places for the PSC segment. By having convergence for different brands and different operations in 2 businesses through one single production intelligence, we've been reaping the fruit. And this gives us a lot of potential for the future. Finally, especially last year, we had a few acquisitions in the PSC segment. We still have to work on efficiency for G&A, and we are going to do this work in the first quarter of this year. We want to offer a more efficient company when it comes to G&A from now on. Thank you for being here, and our investor relations department is available to you if you have any questions. We are always available to you. Thank you very much.
Paula?
Oi, Milena.
Tudo certo?
Tudo certo? Acho que sim.
Ok. Eu acho que eu consegui gravar, então